Hi, welcome to Market Update for August 21st. Well, as we enter what is historically, aside from the holiday season, the slowest time for stocks, one of the things that we want to keep an eye on, of course, are what's happening out of D.C., but more importantly, what happens in Jackson Hole later in the week. Now, out of D.C., of course, we do have President Trump's address tonight. A lot of that is supposed to be about foreign policy, Afghanistan in particular, but let's see if anything is said about tax policy, tax reform, repatriation. These are the things that are being priced into stocks, but more importantly, are needed for a rally to continue. Remember, up to this point, this has been a dollar-driven rally. As the dollar goes lower, the price of these equities seems to go higher because of the dollar denomination. So that relative value trade is intact right now. The real question is, do we want to see the dollar deteriorate another 10% over the course of the next 6 months, which will drive, of course, equity prices higher with some of those earnings numbers? Remember, a deteriorating dollar is not good for the nation in the long run. So that leads us to Jackson Hole later on in the week. Of course, Jackson Hole being the large summit where all the central bankers and all corporate leaders get together is going to be very important for two reasons. One, because of the direction of interest rates, and let's be very, very careful about that. Remember, that relative value trade is still intact between sovereign debt around the world, so we don't want to see a premature spike in rates here if indeed rates are going to stay low abroad. And the other part of the equation is that has a direct impact on what happens to the dollar. As I said earlier, the dollar has been driving this market. Let's put it into perspective. Europe, of course, out of Europe, if you had invested in U.S. stocks, you have seen a 9 to 10% depreciation of the euro currency versus the dollar. So if that's the case, even though you've seen a 10% rise in U.S. stocks, it's essentially a wash as far as European investors are concerned. Now, that is indicative of what is happening around the world. So again, a weak dollar is not necessarily good for the long term. Let's see if Jackson Hole gives us any indication as to whether that will continue or whether that's going to stop. This is Jack Rujan from the CME Group in Chicago.